G. So this is your teacher, accounting teacher Sir Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. So today we are going to solve another question of A2 accounting, international accounting standards, IES and auditing, obviously. So international accounting standard is the most complex topic from A2 accounting, and students used to have very little grip on this topic. Unfortunately, now the examiner is asking many questions from this topic and as a numerical questions, which includes preparation of errors, corrected profit, and corrected statement of financial position. So we have to do this accordingly. So let's solve this question. This question has come in October-November 2231. October-November 2231 from the topic of A2 accounting, international accounting standards. The bookkeeper of NM Public Limited Company produced the following draft financial statement for the year ended 31st December, which contained errors and omissions. Revenue is given. Cost of sales is given. Profit from revaluation 72,000. Obviously, we know that profit from revaluation will not come in the income statement, because if it is a revaluation reserve, it will go to the statement of financial position in the equity and liability section. We used to write it, right? Then expenses, dividend paid also doesn't come in the statement of profit and loss. It will be written in the statement of changes in equity. Dividend proposed won't come, because according to international accounting standard, this is a non-adjusting event, because the dividend is proposed, but it is not yet approved in the annual general meeting by the shareholders. So it will not be recorded. It's a non-adjusting event according to IS 10, and it will be written as given as a footnote in the under the statement of financial position. Non-current assets are given: current assets, total assets, equity and liabilities, share capital, retained earnings, bank loan, current liabilities. Again, proposed dividend is written 25,000 in current liability. It will not come. Why? Because it is a non-adjusting event according to IS 10. Share capital consists of ordinary share of $1 each. Initially, 1 lakh shares were issued and raised 1,20,000, and later 1,50,000 shares were issued, raising 195,000. A year-end transfer to general reserve 45,000 had been agreed on but had not been recorded. So transfer to general reserve, we are yet to record this particular entry. It will be subtracted from retained earnings, and it will be written under the heading of or added in the general reserve column. Okay, let's see that initially 1 lakh shares were issued and raised 120,000. It means that 1 lakh is the amount of share capital and 20,000 is the share premium. And later 1,50,000 shares were issued, raising 195,000. The 150,000 is the amount of share capital, and 45,000, because 195,000 has been raised, 45,000 is the amount of share premium. So 45,000 from this issue and 20,000 from this issue. 45,000 plus 20,000, 65,000 is going to be the share premium. But if you just look at the balance sheet, it's incorrect balance sheet. It is written 3,15,000 directly. Although in this 3,15,000, 2,50,000 is the amount of share capital and 65,000 is the share premium. Next, the 3 vehicles included in property, plant and equipment had the following values: carrying amount, fair value, value in use, cost to sell were expected to be $60 in all cases. Right? You have to calculate the impairment loss in point number 3. So let's do that. We know that the impairment is going to be the loss in the value of non-current asset, by which the carrying amount is more than the recoverable amount. The carrying amount is more than the recoverable amount. And what is carrying amount? What is recoverable amount? It is the higher of fair value. It is the higher of fair value and value in use. 2231 है. October-November 2231 हमारा year है. So it is the higher of fair value and value in use. Okay. So let's see. What is fair value? Fair value means fair value is the market value of the asset minus cost to sell. The cost to sell were expected to be $60 in all cases. It means that Fair value is 33,100 and there will be $60, which is the cost to sell. So we have to subtract 60 from this. 33,100 minus 60, it will come 33040. Then now you can easily assess that in this case, vehicle number 1, the fair value is 33040, value in use is 37,000. So higher of this is the 37,000 and the carrying amount is 36,100. So it means that carrying amount is not more than the recoverable amount. So there will be no impairment loss in vehicle 1. Why, sir? I repeat again. Recoverable amount is the fair value, higher of fair value and value in use. Higher of fair value and value in use. Fair value is the market value minus cost to sell. 33100 minus 60 is the cost to sell. So 33040. Value in use is 37,000. Higher of these two are 37,000. So recoverable amount is 37,000, which is more than carrying amount. So it means that there will be no impairment loss. We don't need to decrease the carrying amount anymore. Next, 29,000 minus 60. So it will become whatever it becomes. You can write it down. That amount is less, obviously. Again, the fair value minus cost to sell is less than the value in use. So the recoverable amount is 29,500 in this vehicle 2, in this case. And the carrying amount is 30,800. So impairment loss is the loss by which the carrying amount is higher than the recoverable amount. So if we talk about this case, it is easily understandable that the carrying amount is 38,800 and recoverable amount is 29,500. 30,800 minus 29,500, you will get the amount of impairment loss for vehicle number 2. So there is an impairment loss for vehicle number 2, which is going to be 1,300. Okay. Next, the fair value 18,200 minus 60. Let me do it. Minus 60. It will become 18,140. So 18,140 is the fair value minus cost to sell. Value in use is 18,100. The higher of these two is going to be the recoverable amount. So recoverable amount is 18,140 and the carrying amount is 19,400. So carrying amount is more than the recoverable amount and that is going to be the impairment loss, which is going to be 1,360. And the total impairment loss is going to be 2,660 on all the vehicles. If I am not wrong, in all the vehicles, the impairment loss is 2,660. Okay. Again, I repeat again, impairment loss is the amount by which the carrying amount is more than the recoverable amount. And recoverable amount is the higher of fair value minus cost to sell and value in use. In this vehicle number 1, the value in use is 37,000 and the fair value is 33040. So higher of this is 37,000. But the carrying amount is not more than the recoverable amount. So there will be no impairment loss. But in second and third, after subtracting the cost to sell, here value in use is more. So that is the recoverable amount. So recoverable amount is 29,400. Right? I will take that. This is the recoverable amount. And in this case, this is the recoverable amount. It is the higher of value in use and fair value. So 30,800 minus 29,500. 1,300 is going to be the impairment loss. 19,500 carrying amount minus 18,140, which is the recoverable amount. So we will get the impairment loss of 1,360 because the recoverable amount is the higher of fair value minus cost to sell and value in use. Nothing. We don't call it anything else. Okay. Now let's move forward. The correct value of inventory at the year end was 18,900. If you look at the question, the inventory value is given, that is 19,800, where the correct value is 18,900. So it means that you have to go for the adjustment for the inventory, and that is 19,800 minus 18,900. What will be the answer? That is 900, right? So 900 is going to be the inventory will decrease by 900, and also we have to decrease the profit or the retained earnings with 900, because the entry will be cost of sales debit and closing inventory credit. On 5th January, let me write the entry so that you can be able to understand it more easily. Here I will write cost of sales debit with 900 and closing inventory is going to be credit with 900. So this is the entry which should have been passed, should have been recorded in the books, but not yet recorded. So we will subtract the amount from the closing inventory 900, and cost of sales is going to be debited with 900, again subtracting the retained earnings. Next, on 5th January 2022, some inventory with a cost of 600 was damaged and could only be sold for 200. So 5th January, some inventory with a cost of 600 was damaged and could only be sold for 200, right? The 5th January, some inventory with a cost of 600 was damaged and could only be sold for 200. We will not give any effect of this particular point. Why, sir? Because this is a non-adjusting event. Because this is an indicative of event which arose after the balance sheet date. So according to IS 10, this is non-adjusting event. Why? Because the damage has done after 31st December. On 5th January, the damage has been done. And now it is sold for 200. So it means that the condition has occurred after the balance sheet date. The evidence of condition does not exist at the balance sheet date. So this is a non-adjusting event according to IS 10. And we will not adjust our financial statements because of this. On 6th January, it was discovered that a credit customer who had owed 1,000 at the year end had gone out of business and was unlikely to pay more than 20% of his debt. This is known as adjusting event. Why? Because on 31st December, it was not known to us that one of the customer of 1,000 will not pay us, will pay only 20%. It has been known to us, it has not been known to us on 31st December. But the bad debts has already been done. We came to know on 6th January. So this is an adjusting event because a major customer has become bad debts and is unlikely to pay 20% of his debt. He was not doing his business even at that time, but we were unaware of that. The 1,000 into 20% we will get, which we will not get, that is 800. So we will record the entry with 800 bad debts to trade receivable. Retained earnings, we will subtract it from retained earnings and from trade receivables. A bank statement was received in January showing that a check from a credit customer of 2,000 paid in 30th September has been dishonored. So that is quite easy. Trade receivable will be debited and bank is going to be credited. Prepare a corrected statement of financial position at 31st December, 18 marks. Can you imagine it, how much marks he has given regarding this particular statement? That is going to be 18 marks. So it's a big number of marks given to the particular statement. No, 7 is not basically regarding, 7 is just an omission of an entry. It is not anything regarding the international accounting standards, right? Because that is just a dual aspect concept which has not been recorded. So let's prepare the statement of financial position. I'm going to prepare in front of you. Statement of financial position. Now we'll go for the dollar sign over here. And we will start from the same format which has been given in the question. And that is assets, non-current assets, property, plant and equipment, 612,000. Let me write it down over here. Property, plant and equipment. Now let's do the adjustments if needed regarding the property, plant and equipment. There is going to be an impairment loss, right? So 612,000 minus 1,300 minus 1,360, because the value of non-current asset has been decreased because of the impairment loss. So the answer is going to be 609,340. So property, plant and equipment will come over here. 609,340. Yes. Okay. Next, we have to write current assets. So let's prepare the current asset section. Current asset mein, first of all, you need to write the closing inventory as usual, because in non-current asset we used to write property, plant and equipment, and in the current asset section we used to write the closing inventory in the first instance. Non-current assets. Just wanted to write it actually to make you understand. So closing inventory, we have to subtract 900 from closing inventory. Then we have to go for the inventory valuation because that is 18,900. If you just look at the question, inventory is given 19,800. Okay. But it is being written, given in the additional information that the correct value is 18,900. So we have to write 18,900 actually because the value of the closing inventory will decrease, has been decreased because of some incident, because of we have written it incorrectly. So we need to decrease the inventory. Decreasing the inventory will also affect the retained earnings, my dear. 900 has come from there actually. This is the difference of the 900. Now the trade receivables, we will write the trade receivables. That is how much has been given. The trade receivables are 36,200. Okay. And we will subtract minus 800. That is the bad debts, which has already been gone through, because 1,000 were the trade receivable. That is the adjusting event. And we will subtract the bad debts of 800. Then there is an adjustment which we have missed. And that is regarding the, yes, that is regarding the bank statement. Let me rub it up. So it will become easy for you to understand. Okay. So bank statement was received in January 2022 showing that a check from a credit customer for 2,000 paid has been dishonored. So that entry will be trade receivable debit and bank credit. So that 2,000 is going to be added in the trade receivables. And now you can write the amount that is going to be 37,400. If I am not wrong, the amount is going to be 37,400. So the total of current assets, I will write in the next column. That is going to be 56,300. And the total assets will be 665,640 is going to be our total assets. Next is going to be equity and liabilities. Right? Equity and liabilities. First of all, we have to write the ordinary share capital. Right? We will write ordinary share capital. And ordinary share capital is given. Let me check it out. Here it is given 3,15,000. Now we have to change it altogether. Ordinary share capital will come with 2,50,000, and share premium is going to be written separately. There is share premium, and that will be written separately with an amount of 65,000. Let's check it out again. In point number 1, if you just look at the point number 1, share capital consists of ordinary share of $1 each. So the share is of $1 each. 1 lakh share we have issued and 1,50,000. So 2,50,000 is the amount of share capital. But we have raised 3,15,000. 315 minus 2,50,000, 65,000 is going to be the amount of, yes, is going to be the amount of share premium. Next is going to be general reserve. Because 45,000 is going to be recorded in the general reserve, it is written. So I'm going to write 45,000 in the column of general reserve because this general reserve 45,000 had been agreed but had not been recorded. So it is not recorded here. So I am going to record it accordingly. Okay. Next point, we have to write the retained earnings. So let's discuss the retained earnings also. But first, having said this, one thing which we have missed over here, that is revaluation reserve. If you just remember that in the question, he has given revaluation reserve also here. which he has added wrongly from revaluation reserve, and it is added in the income statement, 72,000, which should not be the case. So revaluation reserve will come over here because it is incorrectly recorded in the column of retained earnings. Now we have to calculate in the income statement, sorry. Now we have to calculate the retained earnings. So retained earnings at the start, which are not correct actually, that is going to be 267,500. Okay. Now I'm going to correct these retained earnings. 267,500. First, I will subtract the bad debts, which is 800. I need to subtract it from the bad debts. 800 will be subtracted. So I've done that, minus 800. Then the proposed dividend. If you just look at the question, that we proposed dividend, we have subtracted from 25,000, and dividend paid will come definitely. Proposed dividend should not be subtracted from the profit. So it needs to be added back because proposed dividend will not be recorded as it is a non-resting dividend. So plus 25,000. Then I have to subtract the transfer to general reserve. So I will subtract 45,000 as transfer to general reserve. And then for the retained earning column, we have to subtract the 72,000, which is basically the revaluation reserve, which we have to write accordingly. And then we have to subtract the 2660, that is going to be the impairment loss. I will repeat it again for you, no problem. Closing inventory. Closing inventory needs to be adjusted in both the cases, right? If we will go for the both we have been given the both treatment. So we have not been given, so we will not go for the working for the closing inventory. But we have given, okay, closing inventory, we have given this, we have subtract actually. Yes, because over here, the closing inventory was 19,800 and we have subtracted 900. So same is the case over here. I will subtract 900 from here, and then we can find the answer of the retained earnings. Now let me explain you further. See, dividend proposed has been subtracted. That's why we have added it in the retained earnings, because it will not come. Profit from revaluation is added. So it needs to be subtracted from here. That is why I have subtracted 72,000 from retained earnings, and I have written it in the revaluation reserve now at the correct place. So that's why it has two effects: subtracted from the retained earnings and also written in the equity section under the heading of as revaluation reserve. So the answer for the is 171,400. 140. Okay. Now go for the total of the equity. We will go for the total of the equity and we will write in the next column. This is the total equity we have. And let me close it. So how much it will come? The equity section total is going to be 603,140. Yeah. Then I'm going to write the non-current liability section. Here also there is another point, because we have to record the bank loan. Again, there is a point. So let's discuss about the bank loan. In this financial statement, it is been written, I missed that point purposefully, point number 5. The bank loan is being repaid in equal installments, one every 6 months. At the year end, there were 10 installments remaining with the next due on 1st March 2022. I repeat again, the bank loan is being repaid in equal installments on every 6 months. At the year end, there were 10 installments remaining. So it means that whatever the bank loan is going to be, which is given 40,000, there are 10 installments remaining for the bank loan. So 40,000 divided by 10, that is going to be 4,000. Now 4,000 is the one installment for the bank loans is supposed to be paid. Now it is being said that we used to pay the installment after every 6 months. It means in the next 1 year, we have to pay how much? 8,000. Out of 40,000, we have to pay 8,000. So 8,000 should be recorded as current liability rather than non-current liability. Let's see again. Remaining with the next due on 1st March 2022. We are preparing our financial statement on 31st December 2022. It means that 4,000 we have to pay on 1st March, right? And again, the next installment which should have been paid is on April, May, June, July, August, September. So 2 installments is supposed to be paid in this year, and that is going to be your current liability, which is not yet paid because he clearly mentioned that 10 installments are still remaining. Yes. So 8,000 is going to return under current liability, and bank loan will be written with an amount of 32,000, which is a non-current liability, because the 32,000 is supposed to be paid after 1 year. So now I'm going to write the current liability. So first it comes bank loan will be written in current liability, which is 8,000. Then I will write the trade payables. It is given in the question. Let me write it down. Trade payables are 221,900, but post dividend won't come. Post dividend will not be treated as current liability. 21,900. Why? As it says with you, okay, IS, it is a non-adjusting event according to IS 10. So that is why I have added the proposed dividend, which has been wrongly subtracted from the profit. So I have added in the retained earnings 25,000, 267500 plus 25,000, right? And it will not be shown as current liability also. So I won't show it as current liability because it will not affect statement of financial position. Rather, it will be written as a footnote only. Now, the most important point, that is going to be the bank portion, your cash position of the business. So if you just look at the question, we have cash available, cash and cash equivalent of 1,400. You must have this question in your mindset, why you have didn't write cash and cash equivalent of 1,400 in the current asset section. I believe that the students should write in the current asset section 1,400, and then they have to adjust it accordingly at the end of the question. No matter, doesn't matter at all, because this is how the question has been developed. Why, sir? Because you know that 2,000 needs to be subtracted from the cash and cash equivalent. Why? Because there was a check which has been dishonored, and for that we have passed the entry trade receivable to bank with an amount of 2,000. So trade receivable, I have added 2,000 because the check has been dishonored, and from the bank, 1,400 was the cash equivalent minus 2,000. So we have a negative balance of 600, and that will become our bank overdraft. So that's why I didn't write it in the current asset section. So 30,500 is going to be the current liabilities, and the total will become again the same. 665,640 is the total of equity and liability section of the balance sheet. So this is how we have done with this question. So if you have any problem, you can ask me. That's not a big issue. I can make you understand. 665,640. So balance sheet is equal. Any question you can raise. So it looks as if the question is quite easy. But believe me, you won't find a solution of this question in all social media. Why? It's a difficult question. So it takes much more time and effort for the teachers to solve the question and for the students to understand this question. I mean to say that even it has come in October 2231, unfortunately, students are just least bothered about it. And that's why they are not able to get good result in the exams. But from nowhere, you can say this, that this is an easy question. From nowhere, you can't say that at all. Because there are so many points which has come in the balance sheet. Other than IS even, there are international accounting standards involved. That is the impairment, IS 36. Then we have IS 10, adjusting and non-adjusting event. We have discussed that. 6 is the non-adjusting event, and the second part of the 6 is adjusting event. That's why we have subtracted 800 from retained earnings. and we have subtracted also from trade receivable. Then the seventh point is not regarding IS. So prepare a corrective statement of financial position of 18 marks. 18 marks. Can you imagine? 18 marks of this particular only regarding this particular statement. So there are not many of the amounts I have written, but the calculation is basically the problem. So there is too much calculation or little more better understanding of the concept. But you can ask any problem if you have. So subtracted from closing inventory 900 and also subtracted from the retained earnings. Dual spec concept is still there. So we don't need to worry. If you are going for an effect, you know that you have to go for other effect also. So dual spec concept is still applied in this. Same as impairment 2660 minus from retained earnings, and it is also subtracted from the property, plant and equipment non-current asset section. Right? Then transfer to general reserve. I have written the general reserve in the equity and liability section and subtracted from the retained earnings. Here it will be written separately. So this is how we are done for this particular question. Let's see the other part of the question now. State whether each of the two events in point 6 of the additional information are adjusting or non-adjusting. I have discussed that already. First part is non-adjusting and second part is adjusting event. Explain why a business might want to revalue its non-current assets to give its more realistic value, to show the non-current asset at its more realistic value, and to record the non-current asset at its actual value so that accurate depreciation can be charged. Because you know that revaluation, there is a revaluation upward also, and there is a revaluation downward also. If a non-current asset is not valued properly, it means the depreciation is wrongly charged. That is why we used to, overturn all the depreciation first, and then we create the revaluation reserve to give a more realistic value of the non-current asset to be recorded in the statement of financial position, so that the depreciation should be charged, right, according to the new policy on the new value. Because whatever depreciation has been charged was not correct. An amount of 7,600 for irrecoverable debts is included in the expense in the income statement. The debtors are considering creating a provision for doubtful debt to reduce the level of future irrecoverable debts. Advise the director whether or not they should create a provision for doubtful debt. Justify your answer. This is the question of AS actually. We will create provision for doubtful debts because provision for doubtful debt is created for the expected future loss of bad debts before the occurrence of that loss according to prudence concept, to avoid that loss, so that profit should not be overstated and trade receivable should not be overstated. So these 3 points has to be written in this part. Prudence concept, profit not overstated, and trade receivable should not be overstated. Okay. Any problem, Khadija? Any problem? Please, you can ask me. Yes, please. Sure. Yes, Fareed, please speak up.
The problem is in point 6 part 2 the adjusting event. सर वो adjusting event कैसे वहां पर probable लिखा हुआ मतलब in other sense?
Yes, you are right. Now let me discuss with you. Probable or probable not is basically we treat it in IS 37. That is for provision, reserve, and contingent liabilities. That is not for adjusting and non-adjusting event, right? So it has nothing to do with probable, right?
But sir, isn't it on January that it was discovered that a credit customer
Yes,
who had owed
that's the
1,000 at the year end had gone?
that's a good question. That's a good question. Now, because you must be feeling this, that on 6th point, the inventory has also been known to us at the almost at the same date. But problem is this, that adjusting event, we believe adjusting event are those events which will have a greater impact on the financial statement if it would not have been recorded. That's why we used to adjust our financial statement. So we believe that without recording the bad debts, we will not apply the prudence concept also. And according to IS 10, adjusting event is an event which is where the evidence of condition exists at the balance sheet date. So basically balance sheet date पे evidence exist कर रहा था कि ये बंदा पैसे नहीं देगा, हमें मालूम नहीं था. It was discovered. It was not damaged. He didn't inform us at that time. हमें पता चला. Okay. तो एविडेंस उस वक्त मौजूद था उसका कि वो हो जाएगा और इट हैज ए मटेरियल इंपैक्ट ऑन द फाइनेंशियल स्टेटमेंट. ये भी हमें देखना होता है ना, उसके हिसाब से फिर हम इसको डिसाइड करते हैं. अगर मेजर कस्टमर कोई इंस्टॉलमेंट हो रहा है, मेजर कस्टमर कोई बैड डेट कर रहा है, ठीक है जी, तो हम उसको रिकॉर्ड करते हैं और उसको एडजस्ट करते हैं अपनी बुक्स को अकॉर्डिंग टू IS 10. That is an adjusting event. If you just go through the definition and you just go through the examples I have quoted, you will find out this example also in my lectures.
बट सर अभी भी वो है कि सर वो सिक्स वाला उधर कोई ऐसी इंडिकेशन नहीं आई कि जैसे आइडिया हो कि इसे माइनस करना है या नहीं करना, कंफ्यूज